I am of the opinion that the Bitcoin 4-year cycle is a random pattern mistaken for a trend due to the clustering illusion. Bitcoin's price isn't strictly deterministic. Halvings correlate with past rallies, but correlation doesn't imply causation, and future cycles will deviate from expectations. The hot hand fallacy leads investors to believe the cycle will continue, but studies show extrapolation of past trends rarely predict outcomes reliably. And the law of large numbers suggests that Bitcoin's price won't consistently follow a 4-year rhythm, especially as institutional influences grow. I see the 4-year cycle as a statistical fluke. Prove me wrong, please. Yeah. This is my answer is I can't. I can't. You're on the money. And let me explain why. Now, I know we've had cycles in the past. We had one cycle lasting exactly 1,034 days, and another cycle lasts exactly 1,035 days. It's uncanny, but a lot of that has to do with, as you correctly pointed out here, the hot hand fallacy. But let's get into why I think you're right and why I think things could be different. Again, we'll see. First of all, why this all could be a fluke. There are way too few samples. We've only had 4 halvings, and the first 1 or 2 really, nobody knew what was going on. So you could argue we've only had 2 cycles, and the second one was completely manipulated, so the results were doctored. And that is way too small a sample. And patterns could easily be random clusters, like seeing streaks when flipping a coin. We also have weak statistics. When tested, the data does not show strong, consistent fits. Simulations suggest you could see similar cycles by chance. Also, by the way, what's important to look at here is the actual returns for the cycles. I actually did a video earlier this week, and I looked at the returns debased for money. And the third to last cycle was a 1,200% return. The previous cycle from that was about 200%. The last cycle was only 67%. So that's a dramatic drop in actual returns, diminishing returns, when you look at real value, not nominal dollars, okay? Real value. Also, most important, correlation is not causation. Yes, halvings and bull runs do overlap. Yes, halvings have an impact on the supply. But this is so important. Major rallies were often driven by outside events like the ICO boom in 2017, 2018, or C19 in 2020, and much more than halvings themselves. And then there's also investor psychology. Yes. And it's so funny. I don't know how much investor psychology is out there, but people believe in the cycle. So they behave as if it exists, a hot hand illusion. But when tested, no, cycle trading strategies underperform just buying and holding Bitcoin. Therefore, we'll see. And finally, the institutions and treasuries have completely changed the game. I know people think of, it's like, oh, institutions bad. We'll talk more about how they could be bad as well shortly. And treasuries are bad. Yeah, we'll talk about that too. But to be honest, if we didn't have ETFs and treasuries, we'd be staring at between a $45,000 and a $65,000 Bitcoin. I believe that's how much the other buyers have actually impacted the price. So if you like Bitcoin going high, you should like those. There's one thing that is also critically important too, which I'll share again. Okay, when we talk about, I think it was point number 3, correlation is not causation. This is completely critical here, ladies and gentlemen. This is when they cut, Bitcoin goes up. Red is the Fed funds rate. We are on the cusp of a cut in September, 80 to 90% sure of that, according to CME futures data and Polymarket, etc. But basically, you see here, the red line is the Fed funds rate. When the Fed funds rate goes down, Bitcoin price goes up. When the Fed funds rate goes up, Bitcoin price goes down. Ta-da! It's probably that and money flow are the 2 most important things right now. Okay, that's all that matters. Forget everything else. Forget everything else. If money is piling into Bitcoin and the rates come down, more money will pile into Bitcoin and the price will go up. Okay? Don't overthink it. It's not hard. So Jabberwocky, thank you so much for the question. Brilliant question.